Just a quick question. How many of you have paid in a shop with a mobile phone? You know, raise hands. Have you paid in a shop with a mobile phone instead of cash? Many times? Many times? Raise hand. OK. So a lot of people. Yeah, it's great, isn't it? You know, easy, quick, hassle-free. Hassle-free? Are you sure? This is why our next panel is entitled Visible versus Invisible. The responsible application of friction in digital experiences. And to moderate this panel, we have brought a philosopher. How cool is that? Yes, we have brought a philosopher. She is, first of all, she's a woman, so don't expect any bearded man, Aristotle style, forget that, okay? And she's also the co-founder and CEO of Equanima, a philosophical company which makes people and other companies and organizations think better. So please, let's welcome María Ángeles Quesada and her panel. María Ángeles. Yeah, here. Welcome, María Ángeles. Because we were running a bit late. That's why María Ángeles is going to introduce the panel. It's not that I've forgotten, OK? Because then they repeat the same thing, so she's going to do it. Thank you, María Ángeles.
Thank you, Elena. Hello, everyone. Thank you very much, South Summit, for having me here. And I am in a very good company today. And I'm going to introduce them. Brian Farrell, Executive Creative Director of BBVA. Clara Durodi, author of the first book on AI in financial services, and also chair of Cognitive Finance Group, and Quique Belenguer, behavioral economics global leader BBVA. Well, we are very glad to be here today, and we're going to discuss about, as Elena said, about cashless economy. We're going to discuss about digital experiences, friction in these digital experiences, and in this panel titled Visible versus Invisible, the responsible application of friction in digital experiences. So let's go into start, OK? First, I would like to ask you some questions. You have to participate, please. Who thinks technology is something neutral? Can you raise your hand if you think technology is something neutral that we can use for good or for bad? OK, don't be shy. I mean, we're here to, OK. Again, just to have a, OK. Yeah. Who thinks money is just a tool for transactions? Only just that. OK. Thank you. Well, and who has thought about the implications of a cashless society? Who has thought already about this? Oh, come on. OK, not many of you. OK, good. OK, so you know I am a philosopher, so I like asking questions. So let's start with, what is a cashless experience? Can you tell us?
Sure. So obviously, there's a lot of cashless experiences, a credit card, mobile pay, QR code is a cashless experience. But I think we want to focus this conversation today on the experiences that are using new technologies, RFID, Bluetooth, machine learning cameras, to create really seamless, frictionless experiences. Within BBVA, we're testing a lot of these technologies through different pilots, and a few examples of pilots that we've launched publicly. In the cafeteria environment, we launched a pilot where you pay with biometrics. So you connect your phone to a totem that has cameras, and you can bring your tray up to the totem. One camera reads all of the items on the tray, another camera measures your face or the measurements of your face, and the payment happens automatically, and you move on. Another experience, it's basically like the Uber for restaurants, where you can reserve the table, you can order, and you can pay or share the payment with your friends at the table, ultimately removing the step of having to ask for the bill from the waiter or having to pay with the waiter. Another one that we recently launched here in Madrid with McDonald's in the northern neighborhood of Pazuelo, connecting a mobile phone with your license plate. So You can make your order through the phone, and as you drive up through the drive-through, there's a camera that recognizes your license plate, and then you just pick up your food and drive off. That also, the payment happens automatically. So we're testing a lot of these new technologies within the payment experience to figure out how seamless can we make these experiences without creating friction or tension, either with the user or with the bank.
Okay. We titled the panel Visible versus Invisible. So can you maybe explain us what is visible here or what is invisible here? Maybe these non-frictional experiences.
Okay.
Kike or Clara?
Well, I can talk a little bit about the invisible. Here's how I reached this point of philosophical reflections to better understand what the invisible means to our lives, our financial lives. So my background is financial services. I used to do the thing. I'm trained as a fund manager, and I spent most of my career in the city of London, where I live in London. So in 2014, I left the corporate world where I had a management experience, and I decided to go and research two main things. One was trust in humans. How do we build it and how we destroy it? And also how we can encourage trust with, or build or redefine trust with technology. And then I moved on to research the intersection of neuroscience, artificial intelligence, and wealth management. And my final point of destination is this invisible place called episodic memory, which is our past experiences, which determine how we save and how we invest. Things which we can't even put a finger on, to things like how we registered, how our parents spending money or investing or saving money when we were, 2, 3, very young. That's the type of memory we can't recall, and is the invisible memory which conditions us to make financial decisions. And then I moved on, and in my current work, I spend a lot of time working with decision makers in financial services, primarily board of directors, where I try to explain, and they invite me to advise them on long-term strategy with artificial intelligence so much in such a way that they are not widening the gap between engaging with their customers through technology and staying close to their customers. So I'm one of the proponents of the invisible force, which actually dictates, unknowingly to us, dictates how we spend money. And my major concern is that as we spend money with our face or with our fingerprints, two major concerns here. One is that our brain doesn't register when we make that kind of spending. And at the end of the month, we have to face the reality, which is paying back. And the other thing is, longer term, is the storage and management of the biometric data we collect from our customers. Because if we lose that data or someone hacks it, it's much more difficult to change a face than to change a password to an email.
Yeah, okay, Kike.
Yeah, I can have that. And basically around the question of visible against invisible is something that we discussed in BBVA with Brian. No? So the idea of having invisible payment is great because it's really comfortable. You don't have to carry your wallet. You don't have to carry your cash, sorry. But that has some implications because when you're paying with cash, you have really close what we call pain of paying. Paying is painful. And we don't like it, but it has a purpose. It's to control yourself. Because if you have this ability to postpone all your sacrifices to the future, and you don't even see them, you're actually feeling better in the short term, but you may find, like in the long term, that you are making bad decisions. So the question here is how we balance that. We should go to a society in which we give our clients frictionless experiences, but how can we help them to keep control on their finances? So there are a couple of things that we can do. Basically, on one side, it's working on how we make visible, the pain of paying. Maybe it's just with a push notification in your app, like creating a new model of interaction with money. And on the other side, it's we are having this on expenses. What are we doing on savings? If we are going to automate everything, something we are working with Programa Tu Cuenta, this other project that the design people in BBA they are developing. It's, for example, rounding up your credit card. You are not seeing, it's invisible, but it's saving. So can we help clients using this new seamless world to achieve their financial goals? And I think that's the question, and something that's still unsolved, but we need to keep on talking to find better ways to help everybody deal with their financial
Yeah, I
issues.
totally agree, and I would like to add something from my perspective, because I think we are in a society that we're going for like frictionless or seamless or hassle-free relationships too. And money always is a crystallization of relationships. So we are having these superficial, easy relationships now because we don't have conflict. But what I want to say here is that as human beings, if we don't have this dialectic, this friction, this conflict in our relationships, they are not going to be meaningful. They're not going to be so interesting.
Sure.
So I agree with you in that, what you're saying. And I would like, because Clara said something about, as I understand it, about the meaning of money for human beings. And let's explore the meaning of money in general and in cash in particular, just a little bit, okay? And we can go back to cashless later. Just to go deeper on this aspect, the meaning of money and cash. Who wants to? Yeah, Clara, maybe you want to?
Thank you. So in my previous life in financial services, I used to work in wealth management. It's a direct engagement with generations of people preserving and trying to build wealth, or finding ways to retain that wealth for the next generation. So what I've learned many things from working directly in this space. So it's not banking through the usual type of banking. It's wealth management, directly engaging with those who have certain wealth. And that experience actually has enabled me to see that every single one of us, we have a different relationship with our money. And money is the reflection in many ways of how we see life and how we engage with life, and sometimes how organized or disorganized we are. And sometimes we can be disorganized because we're going through a very difficult time. Divorce, for instance, it's an example. Sometimes we are faced with decisions like getting married. You know, it's an event in our lives which define or reshapes the way we engage with money. And sometimes we look at our parents who have a different relationship with their money. For instance, my dad said to me, he's like, I used to save money every time of the day, but not anymore. How many years have I got left? I want to enjoy what I've got. So money is the measure of how we have the relationship we have with that type of medium. And I think because we are evolving, and every day, almost every day we change as a result of the environment we engage with, and experiences and people, and what happens to us. We lose our jobs, we get married, whatever happens, we get divorced, we have a new child. That relationship, that's where the banks actually can come in and actually help us manage those events in a better way, educate us. And I think that's where I believe deploying technologies like predicting technologies like artificial intelligence actually creates a medium for banks to make a difference, a positive difference in clients' experiences. So a very long answer to a very short question.
Thank you, Clara. I'm going to ask you to be very brief, okay? You want to comment on that? The meaning of money or cash?
Okay, maybe just one idea that
Okay.
I thought. One thing that we talk in behavioral economics, one concept is called mental accounting. It's how we classify money, because ideally money, it's just money, but it's not. I mean, depending on the origin and the destination of money, we use it differently. So you won't spend the same way money that came through your salary, that came as money that the government gives you back because of your tax deductions or whatever. So the way we use cash as well can work from a mental accounting perspective. You have like some money for restaurants, money for the cinema, and you can, if you go out tonight and you put like 50 euros in your wallet, how much money are you going to spend? 50 euros. That's it. You have your pot for tonight. But if you don't have that, again, you're losing control. So payment method is not neutral. It's like if you go to a restaurant and you are charged either by the plate or by bite. By bite would be like more efficient if you were Mr. Spock, but how annoying would it be to have the waiter there like counting like 1 bite, 2 bite? I mean, you would enjoy your dish. So the way we use the money, like as cash or a credit or invisible payment, is not neutral and have like a lot of impact, and we have to understand that.
Yeah, I think I'm going to introduce the next topic because it's very important for what we're discussing here, and I would like to talk about the concerns we have with these experiences. For example, because for me, cash is something that gives autonomy and power to people, individual freedom in a way, as opposed to the system. Because when we have cash, maybe, you know, the poorest people in the world, they can find 2 coins around the corner and they can go buy bread. And so this is important that we take this into account in this case. And so what about this problem? I mean, what about the poorest people in the world? What about this plan B out of the system that can be cash? And what about data? Of course, I mean, what about we are giving info to companies, to banks, with these digital experiences? So what about data? How can we use data in a responsible way? Or are we going to accept this lack of privacy as human beings? So,
sure.
Brian?
I mean, I can talk to the user effects, and I don't want to paint innovation as a bad thing. I think there's a lot of really good effects with these types of seamless experience in terms of time efficiency, in terms of security for the merchants, in terms of control of inventory and getting a better relationship with the user. But there are challenges that we need to figure out, particularly in terms of, from a psychology perspective, we've talked about it, but in terms of our perception of the value of money. I mean, the total spend with credit cards is more than with cash. We can assume that the total spend with invisible payments will be more than with credit cards. So are we creating this false sense of financial freedom? From a sociology perspective, you know, cash in a lot of our countries, specifically in South America, is a really, really important method of trust building. So when I want to build your trust, either socially or professionally, I take you out to dinner or I take you for a coffee, and that moment of exchange of me paying is a really important moment for the two of us to create that relationship. So if we remove that moment, are we removing the opportunity to build trust? And also from the other side, I mean, there's challenges from a business perspective as well. A really big bank in the United States, you know, they have seen, I can't say the name, but they have seen that as they remove friction from these payment experiences, fraud complaints go up, which makes complete sense because at the end of the month, you receive your monthly bill, you don't have that capture of the payment moment in your head because it's either been removed completely, it didn't exist, or the impact of it has been reduced so greatly that you see your bill and you say, I don't remember this, I don't remember this, I don't remember this, fraud, fraud, fraud. And to respond and resolve fraud complaints is very expensive. So, I mean, I think we're seeing both sides. We're seeing really positive effects and we're seeing really big challenges that we need to solve for.
Yeah, I would like to hear something about the use of data. I know maybe you want to say something, but very brief, please, because we don't have much time.
As brief as I can, and that's called data statement. And my submission to you today is that over time, I don't know, 5 years time, 10 years time, clients of banks, as they realize the value of their own data, because that's where our society is going. Finally, we're waking up to understand how much our data actually counts for businesses. So banks should expect, on a horizon anything between 2 to 10 years' time, that their clients will want to receive on a monthly basis a data statement, exactly as they receive a bank statement with how much money they have in the bank account. Because we want to know what's happening to our data. We want to know how many times our data has been hacked. Our data, not general data of clients. We want to know how many times our data has been sold, and that can be tracked. So that's as short as I can get on data statement. And also the use and the storage, as I mentioned earlier, of biometric data. It's very, very important, and banks need to ensure that they have they are the custodian of data for their clients and the customers. And this is where the future banks, successful banks, will be the banks who can be the custodian. They can feel, their customers can come to them to feel safe. My data is safe with you, exactly as my money is safe with you.
Kike, do you want to add something?
No, it's okay. I think they covered everything. I don't know more than that.
Well, okay. So we're going to address the last question, and then we're going to have a final statement. The last question is very important, I think, for responsible innovation, because how can we inform or communicate or get people involved in this process of creating this technology? So how are we going to make a society where we want to live in? Yeah? So go with your ideas, these last 5 minutes.
Yeah, I mean, I think the position of BBVA is, I mean, we don't want to be the parents. We're not going to prohibit people from doing something. We want to provide really important, contextual, personalized information through advice and recommendations, and let the user make the ultimate decision. And I think a perfect example of this is Uber. Back in 2012, 2013, when they introduced the increased pricing, or surge pricing, and it was a really big problem in the United States, and lots of people woke up on Saturday and Sunday mornings after going out late with a $400 bill for a 20-minute ride. And all they did was introduce one layer of friction to solve the problem. Now, instead of reserving your car immediately, when it's a surge price, you get the page that gives you exactly the estimated total, so the right information to make the decision, plus the ability to say, yes, I confirm I want to pay this charge, or no, notify me when the surge pricing has reduced. That is our approach as well. Give the information in a really concise way, in an intuitive way, but let the decision ultimately be the user's.
What about co-creation with the public, or trying to involve more stakeholders, or more agents, different agents, philosophers, for example, or different people, all types of consumers? And what if you want to add something here?
Sure. It's always important to bring the clients, like that observation that Brian brought about how in South America money has like a signaling power. So it means something else than just the transaction itself. But as well, we have to bear in mind that people have not really clear preferences, and we need to deduct what their needs are sometimes when we are forecasting. And you're in design, you probably know that better than I do, but from a behavioral science point of view, we are kind of a skeptic on the answers that we get from people when they are assessing things that they don't really know, because people can make judgments when they have a context. So you judge something because it's in between something and something else. But if you're putting them an idea that comes out from nowhere, they're going to struggle to give like a real valid idea. So we need to find proxies to understand how can we solve their lives. I don't know if they're going to tell us when we go with the invisible payment tools. Well, I mean, I may lose control of my savings. It's something that we have to bring the connection. So they may say, we may lose control. Say, okay, we lose control, but control, what does it mean? So expenses and savings. So can we create a new experience that helps them from the automation to gain back the control of their financial goals? So for me, that would be the kind of approach in terms of co-creating. So yes, but with really smart questions.
Okay. So do you want to add something? Because we have 1 minute and a half left. If we want to add something, or we can go with a final statement maybe.
Yeah,
one idea we want to give the
yeah,
audience.
I mean, I agree with everything you said. I mean, the co-creation happens through bringing really smart people together that bring different perspectives, obviously testing with our users and hearing the things that are working or not. I mean, I think the big outstanding question is, and something we didn't get to, but they want innovation. They're asking for innovation and they're adopting it quickly. But the big question is, do they know what they want? And how do we help them understand what they need? Because their behavior and needs sometimes go against what their desires are showing.
Yeah, I think it's very important that we have these kind of discussions, but we need to think about what really want, because it's not easy to know what we want. I know, because I work with people, and it's not so easy to know what we want, and we need to be educated, of course. We need to have this context, this sensibilization too about the matter. So I think I'm going to end up the panel. I will ask some questions, if you let me, to the audience, just to leave you some thinking. I really will say to you that, do you think technology is something neutral now? Do you think technology has an agenda? Do you think we can co-create technology maybe with the people leading this change? And I just want to say that maybe we don't have to lose control to technology, because we are human beings and we are we have to be the leaders of our lives at the end of the day. This is what I think as a philosopher, but thank you very much. You want to add something?
I'd like
Final
to
statement, okay.
Just one point. As we move towards a data-driven industry, we will be using more and more artificial intelligence to be able to make sense out of the data. To deploy AI responsibly and ethically, something which I will be discussing tomorrow in a keynote, ethical AI, we need to have a multidisciplinary approach to thinking about this technology. Data is biased. It's not neutral. So we need to make sure that we, as you said, we are in control of how we deploy this data. And yes, we need to understand what is AI, how it's deployed, what it means to our lives. None of us needs to hide under, under a rock and say AI is too complicated. I don't want to find out what it is. You have to educate yourself in that field. And allow me to say that this is the reason for most professionals here. I wrote a book called Decoding AI in Financial Services, and it's to empower professionals and decision makers about what AI is and what it means to our industry.
Okay, so let's be empowered. Thank you very much.